on human tragedy, whether it's at the hands of a natural disaster, the hands of evil, or a pandemic like the one we're living through right now. Human beings struggle to process large numbers. It's why you haven't heard me mention the death count at any time, at any point over the last several months. People just cannot conceptualize large numbers, whether it's the death count or the labor market. The loss of jobs in this market is important, and I think when we get to 20 million, we lose sight of the human stories behind that data. That isn't just a data point, it's not just a statistic, it is a human being behind that number who has lost their jobs. And over the next several days when we cover these numbers, we need to spend a whole lot more time thinking about that issue.
Hello, this is James Anderson of SD Bullion, and this will be your Bullion market update for May 8, 2020. Jonathan Farrow of Bloomberg is in a sense spot on correct. When our brains get confronted with gigantic numbers and overwhelming data, it tends to shut down and or fall woefully short in comprehending what it's being confronted with. Such is part of the argument against centrally controlled or top-down led financial systems and or economies, but we'll get more into that complex and ballooning subject shortly, as we review how legislatures, the U.S. Treasury, and the private Federal Reserve intend to supposedly rescue our collective financial futures. Or more cynically, pick winners and almost fully ignore losers as they move to debase unfunded promises we cannot keep in real value terms. But first, let's have a look at some long-term charts and essentially point out the fact that the U.S. economy is never going to be as it once was only a few short months ago. Now that over 1 in 5 working adults in the U.S. are out of work, and given that the baby boomer demographic is retiring at a clip of about 10,000 per each and every day this decade, we now almost are certainly headed into an economy where less than half the population works for a living. But don't worry about how we're going to pay for things. If we don't have enough tax receipts, we'll just pile on more debt. The labor force participation rate is now back at levels not seen since we temporarily moved the world onto a full fiat Federal Reserve note and currency out of thin air regime. Judging by this chart, we'll probably be headed back to levels not seen since World War II soon enough. Bad news, good news for you still solvent and employed gold bullion bulls out there. The last two eras when we had to shake off major economic downturns, the gold price went ballistic to the upside. This time probably will be different in terms that it will be larger than anything anyone alive has ever even seen before. Silver billionaire bull Scott Menard's Guggenheim Partners recently published this shape-shifting real GDP forecast. It appears to carve about $3 trillion, or some 15% off our 2020 gross domestic product. And how are we going to make up for that lost $3 trillion, you might wonder? Well, currency creators and borrowers unite. U.S. Treasury is looking to borrow a sum of currency that no one would have believed only a few weeks ago. If the financial market won't give it to them, the private Federal Reserve will, especially now that the two entities have effectively merged for this economic crisis. The Federal Reserve's balance sheet is up nearly $3 trillion since 1 year ago, and most financial onlookers now admit that the Fed's balance sheet is soon enough going to clear $10 trillion. All of those unemployed people we covered just a few minutes ago, they and the working mass of the USA need bailouts too. How helpful and potentially inflationary will $2,000 a month checks or cash injections into the Main Street economy be for perhaps the remainder of this year and possibly into the next? Moving on, another $3 trillion in just 1 year of time has been added to our ballooning national debt, and now we've officially passed $25 trillion this week. And in case it hasn't dawned on any of us yet, it doesn't matter who's in office. We're still on pace to clear $40 trillion by the end of this decade. Okay, now that we've covered many unfathomably large and growing numbers, let's examine but a few updated data points illustrating how global precious metal buyers and investors are reacting to all this fiat currency issuance and devaluations ongoing globally. Industrial silver will have less in demand thanks to the economic depression we are now entering. But it's the silver as a store of value, its monetary demand wildcard, which from time to time makes the silver spot price go vertical. This data point was published by Silver Institute's 2019 World Silver Survey, and it was the most important point for silver bulls out there leading into this year 2020, well before this latest crisis. This 186.1 million ounces was mainly attributable back when a still anonymous silver whale took an over 100 million ounce bet on silver via ETFs late in summer 2019, a story we covered here on SD Bullion, which you can easily find if you just do an internet search. How many more high net worth silver bulls are going to be making such bets in the months and years upcoming? You can see on these charts total transparent gold and silver investment fund flows in the 21st century. The black gold chart in the top left has a high front-running correlation to a soon-to-be rapidly escalating US dollar gold price. We have almost 1,000 tons of gold that have been demanded in these funds since the beginning of 2020, and that recent spike is about 1/4 of annual gold supply in a handful of months. A smaller and yet important point regarding the somewhat dysfunctional US Mint of late is that they are still selling gold coins at a clip near the 2013 gold price dip threshold. And our Australian friends to the west, their actions say buy gold now before your currency devalues, not after, if you can. Here's a now cynically cute and dwarfed QE1/2 example from about a decade ago. What's the potential of that history rhyming louder upcoming? Here's a data point showing which monies have done best spanning this 21st century. Who else wants to bet numbers 4, 5, 6, and 7 are going to inevitably lose to number 8? A final point I wanted to communicate with you today was one I found intriguing this week. It kind of deals with 100 years of time and data. The Dow Gold and Dow Silver chart, they have some interesting and corresponding reflections with what we're likely seeing now. The biggest precious metal investment capital flows, they typically start with gold first. And thus on these charts, the mantra of gold leading and silver following, it's confirmed by every major bullish turn for these two well-known monetary metals in the last 100 years. Now this is going to be a bit crude, but for speed's sake, if we simply overlap the two charts, you can basically see how gold, like it is doing now, leads, and then patiently later, silver comes and eventually often outperforms. That is all for this week. All the very best to you and yours. If you enjoyed this content, be sure to give our video a thumbs up and perhaps share it with those you love. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.